Good afternoon, everybody. This is Mark. We're back here for the daily recap. So last week we basically had zero headline news from our friends in Congress because they were on vacation. And they are back, and that has started, the fiscal cliff, the banter is back. So we got to really prepare ourselves that this is going to really dictate a lot of the market moves, certainly lots of gyrations that happen intraday. So overall, we've had 2 down days after obviously a tremendous move last week, and obviously the biggest day on Friday. And it's digesting. I actually see a lot of bids underneath a lot of these stocks across the board, and I like to see some more consolidation in the S&Ps with what it's doing, which means downward action, but the stocks really digest if they've gone too far, or quite frankly are repairing themselves nicely and moving out of tight patterns. So let's go to Apple for a minute, and we can just see from a daily point of view, it came down a little bit today, and you know what? From a trading perspective, that is fine. Down $5-6, almost went green. I'll put up a shorter term chart, 13-minute chart, just so you can see. Went down almost to 580, which we were talking about as a buying opportunity. Went back to 590, closed around 585. So I would expect 1 or 2 more days minimum of back and filling and of just basically scalp trading the stock overall, because it did just come from 505, that pre-market or that intraday low on about a week and a half ago. So keep that in mind. It's come a long way very fast. It probably does touch its 200-day, which is 597, but I think a few more days of back and forth would be healthy. One that woke up a little bit today, didn't close as strong as I like, but again, the market did not close great, is Google. Really has not participated almost at all in this entire move after obviously a nice little downdraft. I think above the 570, which it did close above there, you're going to see a move back to, 670. You're going to see a move back to 685, possibly even 700. We'll have to just wait and see how it happens. If it happens, intraday, or if it's really just, gap up. I'm not so sure, but I think the volume was okay today. I like the action overall. I think it's a good-looking pattern. Certainly 660 should be the stop, but above 670, I think you're in good territory for us to move a little bit higher. Amazon, still hanging in there. I have not traded it really that much. Not a very clean pattern, even though it is grinding higher. I'd wait to either to consolidate or something else to happen. Come back down a little bit, back to earth, maybe 235, 230. We'll have to wait and see. I'm not sure what it's going to do, but it's really an avoid. And that's the key, guys. If you notice, especially if you've been listening to VTF, I'm really not trying to be in every single move or every single stock, because quite frankly, be in the best in breed, be in the stocks that you have some conviction on, and that's where you're going to get paid. And we'll have to wait and see how that works out. So a few stocks we looked at today that looked okay. I know also after hours, GMCR, just as a note, came out with earnings, beat expectations. It's now over its 200-day moving average. No, it's not over its 200-day. It's over, I think that's the 50-day. But either way, it's probably trading around, when I came in, around 34, 35. Possibly could try to attempt to fill that gap, over the next few days. So it's certainly something that has to be on the radar for people from that point of view. FSLR, something we were looking at today, had decent volume. And I like that it closed above 26. It didn't close obviously as strong as, hit 27 and change at some point today. But it does look good. And I'll put up a weekly chart just so you can see it. This stock has not produced any sort of meaningful rally in a long time. And I think from a risk versus reward basis, even using 25 as a stop, risking $1.50 for a move back to 30, possibly back to 32, I think is worth risk versus reward. Ideally, you like to see it follow through a little bit tomorrow, because I think that's going to get some shorts a little nervous. We'll have to wait and see if that's the case. But overall, constructively and technically, it's starting to look good, and it's a heavily shorted issue that, again, when the momentum starts to go that direction, which would be to the long side, you're going to get guys who will cover. We have to see if that's in the cards, but it looks good technically. I think it's okay how it closed. Other best in breeds, I mean, these biotechs, they just seem to be hanging up there. REGN is one of the best biotechs. GALD I talk about here and there. Not a whole lot from a day trading point of view, but something we can look at. Expedia and eBay, the E's, look great on a technical basis. The home builders, I know we mentioned it this morning. They're not quite ready yet, but they're close. And I think they're close to either, in my opinion, either the bull flag or bear flag, and we're not quite sure yet. I think if we hang up here and basically hold our bid a little bit, I think the home builders will recapture some of their leadership. So look at Toll, Len, Ryland. If you want the ETF, XHB. I think it's key to look at, and I like that they're consolidating over a period of time. That to me tells me that we're in good shape. But at the same time, with this headline news that we're in, I think anything goes, and I think that's the key. Anything goes. So you got to just be prepared and try to really take advantage of what's in front of you. Facebook, I feel like that's been on the radar every single day. Ideally, I'd love to see the 8-day catch up a little bit. I do think it fills the gap, which again, it's 26.73, almost filled it this morning. It's a momentum stock. It probably goes higher than that, most likely. Ideally, love to see a back end fill. I know people were saying 25. Great if it happens. I don't know if it's going to happen the way everybody wants to, knowing that retail community wants to be involved in it. If they don't want to miss that opportunity if it actually does get going. So certainly something to keep on the radar. Right now, I'm looking more for the long side, but I'd like to see a little bit more consolidation, possibly some key moving averages playing catch up before I really, get back aggressive again. I have taken some trades off, taken some options off. Over a nice trade from 22, 23.50 all the way to here, but 26.70 I think is the ultimate target. I do think it goes higher than that, but that would be completing a gap fill, which technically I want to see. Other stocks, some best in breeds that might be off people's radar. Yahoo might not be the best trading stock, but it looks great. Yesterday we had SSYS, which is 3D, DDD. These are mid-cap stocks that I think need to be on people's radar. And that's the key. Figure out what needs to be on your radar. Figure out what you like to trade and trade accordingly. You don't have to be in everything. You just got to be in the best in breed, and you got to rotate. You don't want to be in dead money. Banks, I think they need, I was saying it this morning in my morning call, they need some consolidation. I expect that over the next few days you get this consolidation. Ideally, if Goldman Sachs gets back to 115, I will be a buyer of it. If it just hovers between 117 and 121, I'll give it a few more days and then I'll decide what I want to do with it. I'm not going to waste my time thinking there's a bigger macro pattern going on in most of the banks, because there's not. Right now they need some consolidation. With that consolidation, whatever way they move to the upside or the downside, you will have continuation the longer they consolidate. And that goes the same with JP Morgan. It's hovering right now between 40 and 41, 39.50 and 41.50 in that range. If you're going to day trade it, use those levels as key. WFC, BAC, which I know Scott talks about. I think 10's a little resistance personally, but it looks good. It looks good overall. Another best in breed on, I would say on the finance side is Visa, MasterCard, but nothing to write home about from a tradable opportunity. We had a big move last week. I would like to, and the oscillators are at points where, quite frankly, I'd like to see them come in a little bit. As you get a little bit, these down 80, down 70 moves, you obviously shake off some of that oscillator, some of the overbought readings. We're not there yet, so it doesn't mean I'm going to be initiating new longs on with any sort of gusto. It's basically being flexible right now after quite frankly, a very, very good week, and it's really just taking advantage of what's in front of you. If you notice, I don't really mention the Schlumbergers, the oil stocks, and quite frankly, even the ags. I know they have movements. I know that there's some decent looking patterns in there. CFX, not a bad looking pattern. AGU, not a bad looking pattern. But I want to keep my concentration, very tight, because I think that's where I know I personally take advantage of this market best, especially with how we're trading and how thin we are. So if the ags are your flavor of the week, if the commodities are your flavor of the week, whether it's gold and silver your flavor of the week, stick to your plan. Don't spread yourself out too much. I spread myself out too much, a little bit too early this morning, and it got me in trouble. I got bailed out but at the same time, it's something I don't want to do, and I'd rather tell you that it's not the right thing, because you get paid on it for short bursts, but for the most part, it's still a scalping market, and not, quite frankly, with takeaway last week, non-directional. So, and if you could say it could be to the downside. So overall, we can look at the spiders also. Range bound, IWM. Range bound, I'd like to see some back and filling, maybe back to 79.80-ish, 79.50 on the Russell 2000. And on the Qs, we do have some key moving averages beginning to cross the 8 and 200 day. I'd like to see it hold the 200 day at 64.50, but I think it's going to come back and touch there very shortly. So keep them on the radar. I'm not excited. I'm not overly bearish. I'm not overly bullish. I just think rotation is going to continue to happen. And I think the easier money, at least last week, certainly was on the long side. I don't think that's changing on a dime. So I still think on pullbacks, as I saw today, and some of the best in breeds, Apple, Priceline, was on my radar. Google, certainly. Some of the best in breed stocks you can still buy on pullbacks, and you're getting paid for it. So I think that's the key. And that's where you have to be for the time being. But you are getting two-way action. Be flexible on that point. We're not directional. And I think you just got to be smart. Hopefully I had a good day today. We'll certainly be back here tomorrow. And I'll talk to you later.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.